Hi there, welcome to this week midweek market analysis. So for this week over here, if you keep an eye on the events calendar, let me bring this over here as well. We do have a pretty interesting week, okay, especially on Friday, because we know that the first Friday of the month usually we do have NFP. But of course, if you take a look at this Friday here, is not only that we have our NFP, but we do have a lot of other major banks having their holidays. And this will be crucial because it just means that liquidity in the market is going to be slightly lower. And with a very high impact news coming in like that, especially if we can get a surprise element, with a low liquidity environment, then of course the volatility of it during that period may be more extreme. Okay, so this is something that you need to take note of going into this Friday, especially if you're more inclined to do some kind of a news trading technique and approach. Be aware of it. Okay, and of course, even if you go forward a little bit to next week, we do see that Monday is also some of the major banks' holiday, which again means that liquidity is going to be slightly lower on Monday, and the follow through from NFP may be seen, okay, going not only from Friday but into next week. So have that in mind as we are looking at the markets, and of course, if you are looking at it from a news trading angle, okay, be aware of that. Now with that said, let's take a look at the dollar index. Okay, so dollar index as of today, what we're seeing here from yesterday's move lower, we managed to take off the previous low, okay, the mini low over here, which where we were anticipating the wave 3. So we can clearly see that this can be put in as a running flat structure. Okay, so we have a 1, 2, 3, 4 as a running flat, and right now we are expecting the fifth wave down with a projection back towards the previous low around 100.80, right? So that also put in very nicely in terms of an equal length of wave 1, where we can project the length of wave 5. So any decent kind of retracement or pullback would then give us an opportunity to take this trade to the downside. And of course, combining that with the upcoming NFP, you might also use the news as a potential catalyst for this downside trade. So dollar index, short term, we remain bearish on it. Now in terms of euro, most of the time it's just going to be an inverse of it. Euro structure is not as clear cut as the dollar index. Euro is moving a little bit higher, yes, with the weakness from the dollar. But in terms of the overall structure, this itself doesn't look very nice as a running flat. And of course, we don't have a very clear 1, 2, 3, 4, and then 5, right? So for that reason, I'm actually maintaining a pretty neutral perspective on the euro. And even if this just keeps going higher, I'll probably just let this run and observe a little bit more if price reaches this high, see if we can get a rejection and a potential sell trade. If not, we'll then wait for a decent kind of corrective structure to look for more upside. Okay, so for euro, remaining neutral and just stay patient for now. Now pound dollar here has a pretty interesting development as well, because previously we were expecting this as a crawl. We're waiting for a deeper retracement, to look for the buy from the bigger time frame perspective, but market just keeps pushing higher and higher, and recently breaking this high pretty impulsively as well, from yesterday's price action. So what we did is we look at it from a different perspective and say, okay, if this is just gonna keep going higher, is there a structure that we can put in to make it kind of like valid, right? Does it have a very sound and valid structure? So that's where we put in a running flat. Now most of the time when we're looking at charts and when we're doing our analysis and forecasts, we don't always put in a running flat first, okay? Because number one, it's not very common. Number two, it's always very difficult to actually anticipate a running flat and even trade it. Okay, I don't personally trade a running flat. So running flat is more of like, after it happened, how do we decipher a certain movement in the chart? A running flat structure may help to kind of like, analysis. So over here, some guiding principles is that running flat usually would have a hidden divergence structure, which we can see over here. Okay, and as the markets move higher, we don't really get an obvious divergence too, right? Which means that the momentum in fact is strong, and we do have a hidden divergence. So that's where I put in a running flat of A, B, C here. Okay, so what we have over here from a bigger time frame perspective is a 1, 2, and wave 3 is developing. And internally here, the white color ones are 1, 2, 3, and then of course a small decent correction here would give us wave 4, and then we'll look for an upside from there on. Okay, so for pound dollar, any decent pullback, any decent correction would give us a buy trade back up with a target at 2650. Now Aussie dollar over here, nothing much has changed from a structure since last week. Overall, it's very corrective in nature, so any potential pushback up, if we can get a decent rejection from this area, we still look for sell. And ideally, if this starts to do a little bit more of a crawl structure, that will be even better. Okay, so we get divergence, we get a crawl, we get the top of the channel, we get some fips. That is the alignment for us to take that trade to the downside. But do take note that the target here may just be the previous bottom, and you probably just want to assess, if the risk to reward ratio is going to be worthwhile for you. Okay, so that's on the Aussie. Dollar Canadian over here, this little move down seems pretty impulsive for now. So we are looking in as a 5-wave structure, 1, 2, 3. A pullback here will give us wave 4, look for a sell, and then we'll take this trade down as wave 5 to complete the move. So this is a pretty clear structure. Okay, just basically you need to wait and see if you can get a decent correction back up. Any corrective retracement is a potential sell opportunity. Then we have the dollar yen, right? So dollar yen had a decent rejection of this high. This high here, if you take from Fips high to low, we have a 50% retracement. So we have a pretty decent rejection as of yesterday, around 133.74 high. And right now, any corrective structure pullback would be seen as a sell opportunity, with a target back down towards 128.60 and 125.50. Right, this is to complete this 1, 2, 3. Right, of course, this move down here may also develop as a 1, 2, 3. So you have target 1s and target 2s, right? This will be quite clear in terms of the structure, because what we're seeing here is a very clear A. And as long as price remains below this level here, we can expect more downside. Of course, the next or the alternative possibility is that this just comes down very slow, maybe developed into something like that before that drop, right? So it becomes a bigger 1, 2, 3. That's a possibility as well. So keep an eye, right? As you're selling, you want this to keep falling with momentum. If it starts to stall, it starts to slow down, just be cautious of the sell, and we need to then update and look at it from a shorter term perspective, right? Do we wait, or what structure is developing? Okay, so that's on dollar yen. Next up here is gold. Gold has a very decent one. Yesterday we did share, in terms of a triangle structure. So definitely very clear, we're looking for the breakout to the upside. The reasons being 1, 2, 3, 4 as a corrective structure triangle. So definitely we are expecting one more up to complete the 5th wave, right? So nothing fancy, I would say. Very, very traditional, conventional 1, 2, 3, 4, 5, A, B, C, D, E, and then the breakout of it. So right now, gold is kind of testing, getting quite close and testing this area around 2028, which is a trade to extension of this entire move. Now that may be the first target for the 5th wave. So if you have any buy trade, you might want to look for targets around there. Alternatively, this can just do a little bit of correction and push up further towards maybe the 618 extension at 2077. Wave 5 usually is not so straight out in terms of the targets. The range of wave 5 completion is quite wide. So what you can do is perhaps you can take partial profits and then just let some of the position left to keep running higher, and then throw your stops accordingly. Okay, so that's on gold. If you don't have any buy trade right now, then we'll just suggest to be patient and wait for the next setup, right? Don't rush in and jump in on the high. Now next we have the S&P 500. S&P 500 yesterday tagged the 100% of this, right? So we have a 1, 2, 3 wave completed. We do see a little bit of a rejection from here, so if we can get a decent corrective structure, we can expect a deeper pullback, okay, towards the 50% and then maybe another pushback up. Now, alternatively, is that if this doesn't do a correction, it doesn't come down fast, right? And this just does something like that. It's slow, it's gentle. Then, of course, we can expect upside from there on. Okay, so the next piece of information is probably going to give you more clue whether we're going to see more upside or we can take the sell as a deeper correction opportunity. Okay, so right now we're neutral. We're just patient and see how the market's going to develop from there. Now BTC, it has been consolidating for some time. So right now we just continue to maintain neutral. Crypto side, if this continue to consolidate, then of course we still get an upside bias after that, because what we have is then an impulsive correction, right? But we just need to give it a bit more time because this little push is huge, so the consolidation might take some time, right? So some of a projection here give us all the way until like mid-April, so give it another week, we might get some clarity from there on. Alright, so that's all from me. All the best to your trading for the week, and I'll see you guys in the next one.